because one mistake that a lot of people do is overthink the intermarket analysis, and I'm guilty of that myself. Almost never these days because I catch myself. But man, was I really guilty of this when I was much younger, where I would be like, okay, interest rates are doing this, and I think interest rates are going to do that. So that means that the dollar's going to do this, and then emerging markets are going to do that. So then China's going to do this, and then base metals are going to do that. So we're going to short the FXI. It's like, what? If you think rates are going to go up, just sell bonds.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today we have a special guest online, JC Parets from All-Star Charts. How are you doing, JC?
I got JC Parets. Like,
is it not? I said it wrong, didn't I? Parets. My bad.
It's Juan Carlos Parets.
You know what? It could be French. I mean, Juan Carlos.
My mom would be so happy because my mom thinks she's French. She was born in Cuba. She thinks she's French though, because she studied abroad when she was in college in Provence. My dad thinks he's Italian. He was also born in Cuba. So my parents are very confused, and it's a very confusing childhood.
Listen, with a name like Ewell, ain't nobody ever said it right. I'm just saying. And of course, there comes my Texas draw coming out. Ain't nobody said it right.
I love it.
So listen, man, I got to thinking. You and I spoke last time, and I really, really enjoyed it. And that's why I was like, I got to get JC back on. Story time with JC. But the first thing I thought of was like, one thing that really stuck out to me is you were like, by the time you make a trade, you've looked at, in your words, close to 10,000 charts. You know, you've started at the highest of macro levels all the way down to the chart and kind of just filtering your way through. Give me a time where you've ever looked at the charts and then they were just wrong. Like they just told you the wrong story. Because I think that would be super interesting. Because you're looking at all these charts, filtering your way through, and then if something doesn't work right, like where did it break? What happened?
Yeah, and actually I see it quite often, and that's information. So when something is supposed to be doing something or something's supposed to look like something and it's not, that's information. Mm-hmm. So I could give you a million examples, but let's just, because one mistake that a lot of people do is overthink the intermarket analysis. And I'm guilty of that myself, almost never these days because I catch myself. But man, was I really guilty of this when I was much younger, where I would be like, okay, interest rates are doing this, and I think interest rates are going to do that. So that means that the dollar's going to do this, and then emerging markets are going to do that. So then China's going to do this, and then base metals are going to do that. So we're going to short the FXI. It's like, what? If you think rates are going to go up, just sell bonds. Like, why are you going to go to the fifth derivative of the trade and overthink that intermarket analysis? So needless to say, I was really bad at that early in my career, and I have gotten, oh my God, so much better. It's why you always want to improve, because you can look back and see the things that you were more weak in that you know for a fact you've gotten better because you catch yourself. You're like, oh, JC, you're doing that again, and then you see it in others, and you see those mistakes that you've improved on, and you see others making them. You're like, oh man, I remember when I used to do that, right? Okay, so with that intermarket in mind, a copper gold ratio looks exactly like the U.S. 10-year yield. A ratio between regional banks index and the real estate investment trust index, that ratio looks exactly like the US 10-year yield, right? All three of those lines look identical. If you eliminate the y-axis, you can't tell which one's which. So we're going in September of 2018, and interest rates are breaking 3%, going to the upside. Everybody's like, this is it. This is the end of the 30-something year bull market in bonds. Rates are finally going to go up, and da-da-da. And I'm thinking to myself, that I see what you're seeing. I guess that makes sense. But the copper gold ratio is not breaking out like the US 10-year yield. It's actually making lower highs. The regional banks versus REITs index, again, not breaking out with this above 3, like with the above 3% yields, also making lower highs. So something fishy going on here. And the old thought process is that the bond market is always right.
I've heard that.
Right? How many times have you heard that? I've said it myself. In this case, it was the bond market that was wrong.
Okay.
Fortunately, we used our intermarket relationships to not sell bonds on the 3-year yield breakout, but to short them, or to buy bonds, not to sell bonds on the breakout of 3-year yields like everybody thinks you should have done at the time. We listened to the commodities market and the stock market. We bought bonds instead. That was one of the greatest trades for me personally, for sure. That single trade alone paid for my entire wedding 6 months later, just to put things in perspective.
Yeah.
We really did well with that. Not only that, but it also helped us get short equities. My personal trade was the bond trade for our clients. A lot of our clients were shorting stocks, getting out of stocks, before that decline. A lot of that had to do with the fact that, well, if rates are going to get slammed and catch down to those other intermarket relationships and bonds are ripping, is that happening in an environment that stocks are doing well, or are they most likely under pressure? And the bet was they were definitely most likely under pressure. So that worked out really well for us because of one of these things that you're asking me, like where something seems wrong, right? I'll give you another one.
Okay.
Just recently, this summer, we've been bearish of bonds, and the weight of the evidence, a lot of those same factors I just pointed out to, have been suggesting higher interest rates, right? Like overwhelming evidence of higher interest rates, in the same way that in September and October of 2018, there was overwhelming evidence of lower interest rates, except for that whole breakout above 3% thing. That's like, what? This doesn't make any sense, right? So now we're seeing the exact opposite. We've been seeing the exact opposite for most of the year since the spike in volatility. Since then, bonds have been coming off, rates have been coming up. U.S. 10-year yield, 30-year yield rates around the world. But then this summer, like in August, utilities just started to outperform like crazy.
I remember that. Yeah.
Ripper in utilities, which is indicative of lower interest rates, not higher rates. And I remember even saying, I'm on a conference call with our clients. All of our clients are on the same conference call. And I'm pointing to this outperformance in utilities. And I'm like, this is pointing to lower rates. But then all these other things are pointing to higher rates. This is the only one. So then I even said it just like this. I swear to God, I was like, do we overthink the intermarket analysis here? Or do we just trade what's in front of us? And if rates want to outperform if utilities want to outperform in a rising rate environment, that can happen. It's rare, but I guess that can happen. And then it was the other argument. It was like, okay, well, this is unsustainable. One of these has to be right. And when we stick with that higher rates premise that all the intermarket relationships were suggesting, and then as it turns out, utilities on a relative basis just crashed from there. So that was just kind of like a temporary blip, on that correlation matrix. That does happen. Correlations change, especially in the short term. So I remember literally like thinking out loud during the conference call, are we thinking this in the market really? And then sure enough, I was like, let's just trade what's in front of us. Rates going higher, sell bonds, buy stocks. Sure enough.
Dude, that I couldn't agree with you more, especially the trade what's in front of you thing, right? So like
weaker dollar, gold's not even going up, right? You think dollar's going to get slammed. You would have polled 100 market participants that know anything, myself included, and you said dollar was going to do this. What's gold doing in that environment? All of us say up. Yes or no?
Yeah, sure. Of course.
It didn't go up.
Yeah.
Breaking down, actually, relative to stocks, relative to commodities. I wouldn't have expected that. But there you go.
Yeah, and you have to trade what's there, right? The price is all that matters at the end of the day. There was my brother-in-law, I don't know where he got his stock tip from, but he bought Moderna, which makes the vaccine, a little early. And it was like in the $70 range or so when he bought it. And then it screamed up. And every day he's like, oh my God, this is amazing. And I'm looking at the chart and I'm like, it is amazing. You did good. And he's like, should I add more? Should I add more? And I'm like, no, I think you're good. Just hang on there. And like every day he's like, oh my God, I heard it's going to double. If I don't add more, it's going to triple. And then I wouldn't have got all my money in. And I'm like, no. You made a good trade. Just let it ride. And then, it went up to like 170, I think. So he made $100 a share on it, which was awesome. And then it fell like 12% the next day. And I was like, I think now's good. Take your profits, enjoy it, move on. But the whole time he was like, kind of what you're talking about there, right? He's like thinking what's not actually happening, but what could happen. And so because of that, he's, that greed sets in, which a lot of newer investors get lulled in by, right? They're like, oh my God, I should have bought all the YOLO calls, which would have done great, but they would have bought them right at the top is what happens,
Yeah.
So this makes me wonder. Like I have trades where I have had like the best experience learning from that was the kindest ways that I can put it was I paid my Wall Street tuition. And I'm sure that all traders have had a chance to go through there. JC, let's go down a painful road for a minute. Tell me some of the trades that you've learned the most from.
Well, I mean, we can go to the beginning. Two of my first trades that I ever put on. I'll tell you about my first 4 trades. One of them was New York Community Bank Corp. Bought it around 18, paid a decent dividend, kind of did nothing. Right? Mm-hmm. Call it a wash, break even, maybe a couple of bucks in profits, but probably wasn't even worth the time and effort. So let's chalk it up as a loss when you include time and opportunity costs, especially in a roaring bull market. And I'm in this is in 2004, and I'm in this shitty bank stock that's not doing anything. So let's call that a loss, but not the end of the world. So then I buy 6 flags and it quadruples. So I think I'm Warren Buffett, obviously.
Of course, yeah.
Right, I'm the greatest.
That's the worst thing that can happen is when you start out.
The worst thing that can ever happen to anybody is that they crush it on one of their first trades, right? So now I'm like, you can argue I'm 2 for 2 because the first one didn't really lose much other than opportunity cost, but like things are looking on the up and up for young JC. Mm-hmm. And I remember buying Chesapeake Energy again around 17, 18, under $20, and I literally. This will never happen again for the rest of my entire life. I sold every single share on the highest on the day that the stock topped. Mm-hmm. I swear, that is like the last final share, the day the stock peaked. That will never happen again for the rest of my life, nor will I even try because that's not even the goal. But that actually did happen. Isn't that crazy?
Yeah, it was.
Crazy I bet stuff you like felt that does happen. So
I bet you felt like Iron Man, right? You just like used both of your hand cannons and you're like, boosh, I just, took all the monies out of here.
Magna Entertainment, MECA. I don't know. It went from like $3 or $4 to like 0 or something. I'm like, hey, I need to learn something. This ain't going to work. So that's when I started getting into my CMT. So it was that Magna Entertainment just crushed me. And that's when I was like, I need to learn something. Do I get my CFA and, learn about fundamental analysis in these companies? Or do I get my CMT and learn technical analysis and learn about the stocks? And it seemed like quite obvious. I didn't really care about the companies. I was more interested in the stocks. Mm-hmm. Little did I know how important that decision would end up being. Like, wow, did that impact my career and my life? It's taken me all over the world, that decision. Like, wow. Thank God I made that. So I got my CMT. So that, that Magna Entertainment trade for sure sparked the, hey, I need to learn something, which definitely changed my life. So thank you, Magna Entertainment. I will forever be grateful. And then the uranium trade, man, like this was, it was bad. It was really bad. I caught the uranium bug. I should have known better. I was already a CMT. I was already a technical analyst for a few years. Again, I should have known better. This was 2010, I believe. And caught the uranium bug. I had a diversified portfolio of the uranium ETF, CCJ, and then some like small, I think like I forget, whatever, some small uranium stock, like $1 or $2 uranium stock. So I was diversified.
Yes, super diversified.
Caught the bug. This is like revolutionary. This is going to change the war. Who knows what I was thinking. And then no risk management or, mental stops. I forget exactly, but needless to say, I didn't sell any. Earthquake in Japan, Fukushima, nuclear power plants melting down.
Oh, I remember that. Yeah.
Yeah. Yeah, JC was in the fetal position during that. And then a young JC said, "Oh no, it'll come back. It's this is overblown. This is just because of this nuclear meltdown." Wow, they're still nowhere near those highs 10 years later. So,
Oh man.
it was bad, and that was probably the biggest risk management lesson. Like anything can happen, even a freaking earthquake and nuclear power plant meltdown in Japan. Couldn't be further away from New York City where I was, and it was crushing my life. Fortunately, I mean, I didn't have that, I was still young, and it wasn't the end of but it was the end of the world at that time, which is really all that matters. Until you're put in that fetal position, you're never going to get it. You're never going to get it. And, I got it.
What made you want to go so deep into uranium, especially spreading it across that? I've done it.
Probably stupid reasons. Like, I mean, I could go back and check my notes because I have them. Probably the most ridiculous and stupid reasons you could think of.
Well, listen, I did exactly what you're talking about. I was trying to call the bottom in gold a few years ago, and so I bought gold, I bought GDXJ, I bought GDX, I bought anything gold related, and like it just went straight down, and I was like, how did I even get to this point where I thought it was going back up? Because everything was going straight down to zero. It was like gold was basically going to be worthless, and I was the guy holding the bag in the meantime. So what'd you learn at that point, right? Your CMT, you know what you're doing, right? And then you want to go, for a better sense of the term, balls deep into uranium. And now we're dealing with an earthquake. What did you learn? Where did you take that from at that point?
Anything can happen. So this goes into my real life too. Before I do anything, what's the worst case scenario? What's the worst case scenario? If everything we think is wrong, what's the worst that can happen to us? Like, okay, so we buy a call option. So the worst case scenario, the world ends tomorrow, that premium can go to zero. So we can't lose more than that. That is the worst case scenario.
Exactly.
In everything that we do, it's, hey, what's the worst case scenario? Like I just, we hired this one guy, and I did the math on, sort of, and I'm trying to think, what's the worst case scenario? And the worst case scenario is we make more money in like the way that this works, hiring this particular person. In no scenario do we lose in this. Like, it's like, wow, that's a good trade right there.
Yes.
In Bitcoin earlier this year, it was hovering above 10,000. Our risk level was 10,000. So our worst case scenario was only minimum, but the price target was the former highs. Like now they've exceeded those and it's a new trade. But at the time, the price target was the former highs from 2017, which is just below 20,000, which was close to a double. It's like 97% away from where our entry point was. The worst case scenario was we lose a couple of $100. No big deal. The best case scenario is we make $10,000. That's what I'm talking about.
Yeah,
you know what
sure.
I'm saying? So I care. And then I remember saying exactly like, do you see how high do you think Bitcoin can go? I'm like, I don't know, 20,000, 30,000, 50,000, 100, a million. What's the difference? The risk is only $200.
Right.
So pick your target, whatever it is, it matters less. What matters more is what's the risk, only a couple of $100. That's what I'm interested in. Hey, JC, I think Apple goes to 3 trillion. Great.
Okay.
Make it 10 trillion.
Yeah.
Where are you wrong? Where is that thesis no longer valid? That's what I'm more interested in. It's not where you think it goes, is where are you wrong and how close to current prices is that? Where am I wrong? And the closer it is, the more attractive it is to me.
Absolutely.
Not how much for me, it's not how much further away from current prices is the target. It's how close to current prices can the market prove us wrong? That is where I'm most interested in.
That's exactly precisely 100% how I trade, without a doubt. I mean, it's like, just like to simplify things, let's say I'm using like a 10-day exponential moving average, and it's a couple bucks above that. And it's like, if it's below my exponential moving average, that's all I need to know. If it goes below this, then it's obviously not following the trend that I hoped it would, and then I'm out. So that's
proves your thesis invalid.
Yeah, Precisely, exactly, without a doubt, how I trade. Listen to us, folks. This is how professional people trade. You keep your risk limited. You understand your risk ahead of time, and you just let it go to the upside. And then when it stops working, that's when you get out. It's honestly that simple. So listen, if there was anything that you could tell first year trader JC, what would that be?
I think I get asked this a lot, obviously.
Oh yeah? Okay.
No, I do.
Well, sorry to be so cliche on you there.
No, don't. It's a good question. And I ask it myself, by the way. You know, you have to learn these lessons the hard way. I can't tell you how many times I was told a bunch of things. I didn't listen. I learned those the hard way. And I was like, man, they were right all along. Right? I can't tell you how many times, right? So it's not about, because you could tell young JC anything. He wouldn't have listened, Not going to listen. Young JC would be like, nah, I got this. Yeah. Right? Like any young trader, right? No, I'm different. I'm special. I got the skill. I got the CMT. I know what I'm doing. Whatever it is, you convince yourself that you know anything. So like if JC from the future came to JC from the past and be like, hey, don't fight trends unless you're really sure. Hey, JC, manage risk responsibly. Don't be, your position sizing is way too aggressive. Hey, JC, you shouldn't be day trading options at this young age of 23 years old or 22 years old. Like all of these lessons that that I would be telling myself, like, I wouldn't have listened. What would I say? JC, understand follow the trends,
Well, I think your point, and I totally agree, is that you don't understand until you've been there.
Yeah.
You
have to go through there. So I wouldn't have wanted to deprive myself of those experiences. Because as painful as some of those were, it saved my life.
Yeah.
Saved my life.
And those experiences taught you the lessons
for them to learn than others.
Yeah. And they taught you the lessons that you use today. And you wouldn't have had those lessons had you not gone through them.
Which is why I'm all for these Robin Hooders. People are oh my God, mania, all these crazy people gambling. Good. They'll learn. That's the only way they're going to learn. Let them blow up. What's wrong with that? The faster you blow up, the better. So you can blow up again and then you'll get it.
Yeah, that's what I did.
Like, just let them blow up. Yeah. They're kids. They have no money anyway. Good. It's better that they blow up now than when they retire and they're in their 60s and now they're getting all aggressive and they blow themselves up with real money.
Yeah.
Let these kids blow up and make TikTok videos. I'm all for it, dude. I'm all for it.
So what do you think about Robinhood getting their fine? That was big news yesterday. So for the audience out there, Robinhood was basically fined $65 million by the SEC. And they didn't even bat an eye because they were like, yeah, we've kind of been doing this for a while, which is basically selling all their orders and giving their clients the shittiest prices possible, which I've been telling people for years, don't trade on Robinhood because they're literally working against you. Like, the people who are going on Robinhood, that's
my God, but like that's, you're very, like if you think, like if the product is free, it's because you're the product, right? So like if you don't know that, there's a certain level of like, don't be a moron. Like granted, they should have disclosed that they're selling it, but all of the brokerages do that. Like they're not doing anything that the other ones don't do, right?
Right,
like,
but they were just doing it to the level to take advantage, in my opinion.
What's
like
that?
they were dialing up the knob, like how far can we turn this to our advantage?
Good for them. What's wrong with that?
You know what? From a capitalism perspective, totally agree.
Are you kidding me? What is wrong with that? If you want better pricing, use limit orders. Like it's not that big of a deal. And
totally
if you don't
agree.
know how to use it, it's your fault if you don't know how to use limit orders and you're just going to throw it into the market. I don't care whether you're using Robinhood or Goldman or Merrill Pro or any of these, you're right. If you just throw something into the wind, you're going to get whatever. Like, what do you expect? So listen, should they have paid the fine? Of course. Yeah. If they broke the law by not disclosing that, sure. But at the end of the day, it's probably just semantics. Investors need to know that. Like it's not, I mean, all these brokerages are always paying fines. They're always doing, because they're always doing so much that somewhere along the line they're going to forget to dot an I or cross a T or something like that.
Mm-hmm.
And it's the regulator's job to find things that are going wrong or should be, right?
No, I agree. And in all reality, I think it's great that Robinhood existed. First, it brought a lot of people to the market that wouldn't otherwise, like you spoke to earlier. I mean, they grew from just in 2020, they started 2020 with 10 million. And then at their peak was around 13 million. That's a shitload of people. And that's great. That's more people excited in what we do, right? Which is really what we want, right? Let's say if we were playing sports, it's like you and I are the guys who are on TV or podcasts or whatever you want to call it, and they're the people who are watching the TV and the sports and things like that. Yeah. So I think it's great. They're the people playing Little League kind of thing. So I think it's awesome. And I personally think it's awesome because it had basically all the brokerages in a race to zero. So everywhere you go now, it's nearly, if not all the way free, and pretty much any transaction you did. And I don't know about you, but when I first started trading, like a round trip for, I kid you not, like a one lot on a round trip for me was like $20. And it's like, I can't make any money when I'm doing a one lot and it's $20 to do this. So I think it's fantastic.
Yeah, totally. The brokerages at the end of the day make their money in the financing anyway. Like the money's not coming from the commissions. Mm-hmm. That it's for a long, long, long time that hasn't been the case. They make their money on the financing. So that's the case. Let people trade for free all day. What's the difference? It's not gonna eat in. I mean, I don't know the exact economics behind it. I have a lot of friends that work or used to work at these houses, but the big money's on the financing, on the lending, on the margin, on the, loaning out shares for short sellers. I mean, that's good money, especially the ones tough to get. I've paid a lot of money to short some hard to find stocks before, and if you really want to short it, you're gonna pay it.
You know what? I've seen that a lot, especially this year. I mean, like you go to like almost any stock right now, and it says hard to borrow, at least in my platform. And even like SPY, QQQ says hard to borrow. I just saw it yesterday. So then I was like, how is this still the case? What's going on with that, JC? I don't even know.
I mean, I can't answer that, I guess. I think that for people that are selling short frequently, you want to have an account with a brokerage firm that will go and get those shorts for you. Mm-hmm. Where we'll find it, and you're going to pay a fee on that, and then you're going to pay a fee for them to find it, so you're going to double up on the fee. But if you really want to short something, like let's say you're paying like an 8% carry, right? That's 8% annualized. So divide that by the time horizon that you're going to hold it, and if you can make more shorting the stock than the fee that you're going to pay, then it's a win, right? And you do it.
Yeah.
And obviously, if you're planning on shorting it, you already think that.
Yeah, exactly. And I've seen way too many people who claim to be perma bears just go for on and on and on about how their thesis is right, as like every market just continues to go on against them. I don't get that. I mean, I've been there.
Narcissistic people. They're very narcissistic people that are more interested in being right and getting attention, because maybe their mommy didn't pay enough attention to them when they were little. So now they need to be like all like, oh my God, the world's ending. Like, look at me, how smart I am. And, you have to buy gold and ammunition and hide in a bunker and Bitcoin and all these conspiracy theories. Like, and listen, there's people who like that and listen to that stuff, right? So, these gloom and doomers, I think it's, they have real mental issues. Like they have problems, and it's just a law of averages, right? There's going to be, for every X amount of people, there's going to be some that are just way crazier than the other ones. That's just math. And then, in with today's social media and internet, anybody in the world can access that with access to a computer, has a microphone and a video camera and a typewriter. I was going to say typewriter and a keyboard, and can just write anything they want and can try to get all the attention. And then, there's the media is irresponsible sometimes in bringing in these crazy people and giving them a bigger microphone. And there's people that are attracted to the craziness. And in some cases, it's not so much the narcissism as it is that now they're just preying on the mentally weak, and they're smart. and they know that there's a huge audience for the gloom and doom and the world is ending, and people who are very upset with their own situations and their own lives, that they want others to feel that similar pain as well. And there's an audience for that. So there's smart people out there that are maliciously preying on that audience and giving those people what they want: conspiracy theories, ammunition, gold, end of fiat currency, Spanish debt, whatever it is, Fed printing, Trump this, whatever it is that they feel can feed that rage amongst the population, they're going to do. So I think it's a combination of those two things.
I got to tell you, like, that's the social media landscape right now, especially in 2020. I think it's just like, it's really just gone off a cliff. I don't know what you feel about on it, but for me personally, like, I've actually turned it to the point where I've got it turned off. I've got 2 of my employees that handle it. They basically do the outbound, but I cannot go into there anymore because everywhere I looked, it was just toxic. And it's like, why do you hate your lives so much that you want to make other people hate their lives? Just like the toxicity of social media has really got to me. And I think it has a lot to do with that. They're unhappy and that they can kind of commiserate with other people, and it's not a good place to be. So I'd rather stay positive with people like you. It's a lot easier.
Well, thank you. And listen, I'll make some points on that because it's something that I've been thinking about quite a bit lately. I'm probably one of the people that have benefited the most in the social media revolution. I can admit that. I have learned so much from people all over the world.
Oh, yeah.
Simply because I follow them on their blog or their YouTube or on Twitter or stock twits or whatever it is. And they have changed my life. They have changed the way I think. They changed the way I approach life outside of markets in some cases. And for that, I will forever be grateful. And I am totally cool with admitting that, hey, I am one of the biggest beneficiaries of this revolution on earth. No doubt about it, right? Like, I'm in the conversation. Like, I can admit that I have learned so much. I've met so many friends all over the world. You name the city, all the biggest cities on planet Earth, I can land there tomorrow, pick up the phone, and I have friends that'll pick me up at the airport and we'll go out to dinner, whatever it is, in Singapore and Hong Kong, Kuala Lumpur and Tokyo, all over Europe and Paris and London. I mean, I have good friends. Like, these are like I would consider them like very close friends of mine in all of these cities. And it's only possible because of the blogosphere and the Twitter and all of those things. Now, it's not all perfect. And in the case of Twitter, for example, it's important that you curate your stream. So if you're finding that you're following these sorts of people that make you upset or that bring you down on the day rather than lifting you up, they should not be in that curated stream of yours. I've actually gone out of my way where I have to mute certain people. I'm not going to block them because I know they follow me and I know them personally, but I don't follow them, but they keep coming up on the stream because a lot of people I follow them. So I have to mute them because they keep coming up on the stream, right? So I have to do that. I have to go out of my way and block people out of my life, even people that I know personally, because of it. It's just not. I want to go to Twitter and I want to learn. I want to see interesting discussions. I want to see interesting points being made about the marketplace. I want to share my thoughts and engage with those who have counterpoints or maybe agree and put a funny meme of a guy making it rain, or whatever. Like, that's cool too, right? This is what, sometimes I have a question about bonds or, something, a particular subject matter. So I'll ask a question and I'll CC 1 or 2 or 3 of my friends that I know are experts in that particular subject matter, currencies, whatever, technology, whatever, it doesn't matter. And I'll throw out the question and then I'll start a discussion. There's a lot to be learned there. But if you're not, like my dad the other day, he's like, oh my God, did you see this explosion in Syria this morning? And I'm like, why are you like so negative Nance this morning? He's like, oh, it's not my fault. I saw it on Twitter. And I'm like, yeah, it's your Twitter stream. You curated that.
Yeah,
like,
that makes
don't
sense.
blame
Okay.
Twitter. that you're all upset about some explosion or some protest in San Francisco or whatever gloom and doom you're reading this morning. You curated that stream. So then go on to some of the other stuff. I've never had a Facebook account, thank God. I was graduating college in 2004 when Facebook was first coming out. Literally, that was right at the beginning of Facebook. And my friends all got on Facebook because that's how they were going to pick up girls, right? Because that's what we used to do. Like, there was this thing called the Facebook where you would get it. It was like a pamphlet with all of the students in the school and a picture of the student and like their hobbies. And like we would go through, like freshman year, I remember going through that and like trying to find who the pretty girls were. They're also freshmen. I remember like the seniors like inviting us to their parties only if we brought them the Facebook so that they could see the new pretty girls coming in also.
Oh, that's funny.
Right? Like it was called the Facebook. So then when there was an actual Facebook.com or whatever, the app, my friends all got on so that they could meet girls. But I had a girlfriend at the time. So I was like, no. Not to mention, I don't want any ex-girlfriends of mine finding me on this thing. So no, I don't need that. And then all I heard was just horror stories forever, for years and years and years. And even when I didn't have a girlfriend, like I just heard nothing but good things. I'm like, why do you guys put yourself through this? So here we are now. It's 2020. I graduated college, 16, 17 years ago. So I still don't have a Facebook account and I still don't hear anything good, right? So I'm not on that. You know what I use? I like Pinterest.
Oh yeah.
You know, I like Pinterest as a user. I'm not so much of a contributor, but like, yeah, like I want to put it in a pool in my backyard and like a whole bar. So like you go to Pinterest and you go to look at like, backyard pool ideas, and some of these are sick. Like I'm like, I want that one, Oh, like man. There's good ideas. So I use Pinterest, I use Twitter, and I think that's it.
Well, I got to check that out then, because like I know what you mean on the Pinterest part. I've looked at it a little bit. It's been a while since I've looked at it, but there was my go-to social media is like YouTube, but it's not really like social media. YouTube too. Yeah. But that makes a lot of sense. I had to start
my snowblower, so I'm new to this whole suburbs thing and being a dad and dad life. So I didn't know how to turn on the snowblower, so I had to find a YouTube video on how to do it, and sure enough, got it done.
There it is. Now listen, if you're like everybody else, you want to be moving to Texas, then you're never going to have to deal with snowblowers ever. So,
it's a little warm. I like the proximity to Colorado. If I'm going to go out that way, I'd probably be in Southern California, maybe Laguna.
You can't go to California now. Everybody's leaving, and they're all locked up anyway.
Good. So. I'll help them pack. Get the hell out of it. I love California. People used to always say, oh, the people, when I used to go visit Texas a lot when I lived in California, I'd be like, oh, y'all from California moving to Texas. So I'm like, good, you can have them. You know what I'm saying? The fewer people that are in California, the better. I love, and same thing with Hawaii and same thing with Colorado, but everybody's moving to Colorado. Hawaii, Colorado, California. Those are the three best states in this union right there.
I haven't been to Hawaii yet, but we did Colorado a couple years ago, and then we did California last year. We had so much fun. We flew to LA, so I've got two little boys, and we stayed in one of the Disneyland resorts there.
Nice.
Did that, and then we rented a convertible, which was like the best choice in the world. We drove up the 101 all the way from LA to San Francisco, which we thought would be 5 hours, but it took 13 with the kids. And
you took the long route on the coast. You didn't take the highway.
The whole way. And it was glorious. I mean, we had the top down for as much as we could. And so many memories made doing that. So I agree with you. However, everybody's leaving it. I mean, like I got neighbors literally across the street, 2 neighbors in the last 6 months or so that are from California saying,
good, you can have them all. I hope they all move and I get California to myself one day whenever I get to move back.
There you go. Well, I think at that point, everybody will be gone.
Good. Perfect.
Well, JC, hey, listen, we covered a lot today, and damn it, if we didn't start to get into the good stuff right at the end like last time, we're going to have to do this again. I'm over your time, by the way, so I apologize about that.
No worries.
But good. Listen, we want to send people over to allstarcharts.com. Give us an elevator pitch on that real quick so they can know about it.
I've found over the years that analyzing the behavior of the market and market participants is the best way to identify the direction of primary trends and the best way to visualize those changes in equilibrium between supply and demand that define those trends is best seen in chart form. So we provide a lot of chart analysis and sentiment analysis and intermarket analysis and all the relationships among asset classes to identify the best places to put our money. So our audience is literally anybody who needs to allocate money to the market on a regular basis, whether it's the largest institutions in the world, hedge funds and all the banks that pay us, or whether it's a Robinhood investor opening up their first brokerage account, and everyone in between, right? We have a lot of investment advisors as well who find a lot of value in our work. So if you're interested in the global macro, I think All Star Charts is for you. If you're interested in individual trade ideas at the stock level, commodities, currencies, interest rates, and all of the intermarket relationships, but specifically U.S. stocks and ETFs for that matter, I think All Star Charts is for you. So just find me on Twitter, Instagram, StockTwits, YouTube at All Star Charts. Ping me, just say hi.
Awesome. Well, JC, as usual, I really appreciate your time. Can't wait to have you back on for more story time with JC. So, hey, man, I really appreciate your time. Thank you so much.
Got it.
Okay, so what'd you think? That was pretty incredible, right? Now, if you like that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.